Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka. Clearly, midweek blues on the Lal Street. Not that yesterday was any better, but the good part is that we've managed to reclaim that 25,800 mark. We had taken out that level as well. We started the day on a positive note. But then we reversed course and we slipped below the 25,800 mark as well, with the broader end of the markets, of course, taking a sharper knock. But we have paired some of those losses with the Nifty Midcap index now down 0.4%. It was down somewhere around almost 1% or so just a while back. But some kind of very mild pullback that has come in the market from those lower levels. But in terms of sectors, largely sea of red across the screen. But PSU banks are managing to outperform. PSU banks, in fact, in the last 5 sessions, they have gained, in 4 out of the last 5 sessions. So yesterday was a down day for PSU banks, but today PSU banks are managing to eke out gains. In fact, that index is up in excess of 1%. IT is the other one, mild gains there, but nevertheless, some green when it comes to the IT pack. Metals were doing well. For a better part of the day, but they have reversed course and now metals are also in the red. Mind you, the dollar index has cooled off. It's around that 98 handle. So yeah, that's providing some support to metals, but some bit of selling pressure has creeped in there as well. But real estate, continues to wobble. Yesterday as well, it was the top sectoral laggard. Today as well, it's down in excess of 1%. As I mentioned, mid-cap underperformance continues and the breadth of the market, extremely poor. 1:2, that's the NSE advanced decline ratio. Look at the number of stocks gaining. It's just 953 and the number of declines is almost 2,000. So breadth has been a concern and it continues to be extremely weak. But, the good part is that the India VIX has also cooled off. So that's a good sign. Yesterday we were thinking that it was mostly expiry related sell-off that took place. Today, of course, yes, it is a weakish session, but we've done well to recover from those lows. In terms of the currency, just want to mention that the currency opened at a fresh low of 91.08, but it managed to strengthen quite a bit. In fact, dealers are saying that it's a mix of RBI selling and exporters hurrying dollar sales at higher levels. That's something that helped the rupee recovery. And of course, the steep fall in crude prices overnight also, helped sentiment when it comes to rupee. Of course, the talking point has been the pace at which the rupee has depreciated. But yes, the RBI did step in according to dealers today, which is why we are seeing the currency back at that 90.3 levels or so. In terms of individual movers, then very quickly, just want to take you through some of the names. Shriram Finance, it has a board meet later this week on Friday to mull fundraise. So that stock is gaining somewhere around 1.5%. SBI, that's the other big one that's moving in trade, gaining 1.5%. Hindalco, Coal India from the metal basket doing well. Some two-wheeler names like Eicher also featuring on the gainers list. And Tata Consumer, that stock has been doing well. And today as well, it's among the gainers. And Axis Bank, that saw a 5% cut yesterday on the back of commentary on margins. Today, some bit of mild buying coming in there. That's also gaining 0.5% or so. On the flip side, some healthcare names, under pressure. Apollo Hospital, Max Healthcare, these are some of the names that are not doing all that well. Even life insurers, HDFC Life and SBI Life, they are among the laggards. And so are some private banking names like HDFC Bank and ICICI Bank. So yes, all in all, that's the texture of the market. We are off the day's low. Nevertheless, we are in the red and it seems like it is the third straight day of losses when it comes to the market. But to understand what the trajectory is looking like going forward, let me bring on board our first guest for today. Joining me is Sandeep Bagla, CEO of Trust Mutual Fund. Sandeep, lovely chatting with you this Wednesday afternoon. First of all, I want to understand what's really driving this leg of correction. Is it just year-end adjustments that are at play? Because if you look back at the year, we have been big underperformers versus emerging markets. But last 2-3 months, if you see, we have fared much better than most of the global markets. So, what is it looking like? Do you expect the recent outperformance to continue? And the leg of correction that we are seeing right now, is it just attributable to year-end adjustments in portfolios? What's your sense?
So, hi Danta, good to talk with you as always. I think a couple of things from what you said. One is the absolute performance and one is the relative performance versus other EMs. So what we have seen in last 2, 3 months
Hmm.
is the relative underperformance from peers in EMs has improved a little, but in absolute terms, we are not doing all that well. So this year
Hmm.
2025 will be perhaps known as the year of no returns or less returns, or perhaps slightly negative returns. So I think the correction is going on because there's a fatigue. There has been the FPIs have been constantly selling uh, because I guess we have been slightly overvalued compared to the other EMs and other markets which have been triggered by the AI related investments. So I think also when once the valuations are slightly on the higher side, then there is very little margin of safety and there is very little room for error. So earnings, while they have been okay, they have not been as per expectations. So all in all, I think there has been a mild disappointment from the type of growth that we were looking forward to. And the real growth in GDP has been quite good, but the nominal growth has been quite low. And we have seen that the
Hmm.
equity earnings and hence the equity prices tend to follow the growth in nominal GDP over a long period of time. So in a period of nominal GDP coming down, I guess the market is a little confused about what is going to happen.
Hmm. You're right, the markets are a bit confused, but looking at the earnings season, the commentary from managements has been pretty encouraging. And a lot of experts I speak to are, believe that second half of FY26 will be much better. Of course, the GST cuts that have also happened, that could also provide some support, especially to consumption names. Even private capex is expected to pick up as government capex slows down in the second half. But what's your sense? 14 to 15% kind of earnings growth for FY26. Would you say that's reasonable? Given all these factors that could work for corporate India in the second half.
See, I think 14-15% I think is slightly optimistic in my opinion. Let's not forget that there are
Hmm.
headwinds in terms of slowing demand. There's headwind in terms of the trade deal, which, even if it happens, there will be some amount of tariffs, and that could lead to, slowdown in global growth as well. So I think the macro environment is quite challenging. While the central banks are cutting rates, the bond yields are not really coming down because of fiscal issues and also the fact that the inflation expectations have not come down. In February, we'll have the budget and we'll also have revamping of the CPI and GDP numbers. So there's a lot of uncertainty which the market has to deal with. And in lack of any positive triggers in the immediate future, I think markets will be at best in a range. So I don't see any reason why the markets will,
Hmm.
break out in any hurry. So, it is almost
Okay. Okay.
returnless
The
risk.
markets won't be.
Yeah, so it's
Sure.
almost
Sure.
like
Please go ahead.
return. Yeah,
Carry
sorry.
on.
I'm saying it's almost returnless risk that the market is taking in the short term, which is not a great thing to do.
Hmm. All right. Okay, got your point. So, what does one really do in this situation? There's so many headwinds ahead of us. Markets are likely to be ranged. So, is it time to deploy or is it time to sit on the sidelines? How should one approach this leg of uncertainty that's almost that's in front of us?
So, time memorial, I think fund managers and investment counselors have been telling investors that you please remain invested for a long period of time. So I think 2026 could be a great year for accumulation into equities. We don't know when the markets will go up. So while most optimistic people are now turning cautious, I think there could be a good opportunity in 2026 to get into equities. So I think one should just keep investing. I think one should keep in expectations low. I had said a year back, I think maybe on your channel only, that is that this year could be returns of a year of low returns or no returns. I think 26 will be probably at least in the first half more of the same. And I think with global uncertainty rising, I have this pet peeve that tariffs are not good for the economies. So, and I don't think that the US tariffs are going to get rolled back at a global level. So this breeds economic inefficiency. And I think there's already over enthusiastic response to AI related trades, where while the investments are looking to come on board, I think the users are not so enthusiastic. So I think there has been a great overestimation in terms of the user case and the speed of the user adoption. So I think there is bound to be some, disappointment while we are all great in the long run, but short term is likely to remain volatile.
Hmm. Sure, of course. Of course, we all speak about how the long-term trajectory is all good, very rosy, etc. But it's the near term that one is really worried about, right? But let's talk about the broader end of the markets as well. On one hand, we had the headline indices hitting record highs, but clearly enthusiasm is missing. Broader markets have been struggling. As I mentioned at the start of the show, breadth of the market has been extremely poor and on a consistent basis, not just a one-off or, one particular day the breadth is good and the rest of the week the breadth, remains negative. So that's the case. So many stocks are off 30-40% from their record levels. How does the road ahead look like for mid and small caps in particular? Do you think large caps will continue to outperform in the next year as they have done this time in this leg of the
See,
up move that we saw?
I think in my observation, large caps are basically more steady. They are not going anywhere, they are not doing anything. Small and mid caps are the more jumpy lot. So when they do well, they outperform the large caps. And when they do badly, they underperform the large caps. So large caps are not outperforming. The small and mid caps are underperforming. So I think large caps will remain steady going forward because the expectations are also low from them in terms of earnings and in terms of ownership. I think a lot of new money that has gone in would not have gone into the large caps, which are the more steady lot. I think in India, people, we are all alpha seekers. A lot of money would have gone into small and mid caps. If you compare your portfolios, let's say from 5 years back, the proportion of small and mid caps would have gone up substantially in the retail and HNI portfolios. So I think the small and mid caps will be volatile with a negative bias, and large caps will be generally steady. I mean, they might not really outperform in a big way in terms of generating returns, but compared to small and mid caps, it's quite likely that large caps will be more consistent and more dependable in the short run.
Okay. Okay, got your point. Large caps, of course, are more steady when you compare it with mid and small caps. But there's another factor that has been a talking point, which kind of roiled sentiment yesterday. That was the big fall in rupee. If 90 to 91 is the range for the next 1 to 2 quarters, do you think it's time to rotate back into export-oriented plays? Anything that you prefer within the export-oriented sectors to ride out this rupee tailwind that's emerging for exporters?
Yeah, that's a good observation and a good question, Anita. I think IT could be one sector. We have seen that for a 1% drop in rupee, about the IT companies tend to get 40-50 basis points in terms of EBITDA gain. So I think with rupee unlikely to fall much or rise much, I think IT could be a reasonable sector because the valuations have also corrected, and the benefit of the rupee dollar will definitely accrue to some of the IT companies, some more and some less. So there could be some stock booking, but I think the sector could see some investment interest in the next quarter.
Okay. And again, would you recommend large cap IT or would you tilt more towards mid cap?
See, if you are playing IT theme and again depends on your risk appetite. I think we have been investing mostly in the mid cap ITs and they have been performing quite well. So I think in terms of growth outlook, I think the mid cap IT should do better. But I think as a sector, I think IT will is likely
Okay.
to do better because of the rupee depreciation.
Okay, as a sector, IT would do better in light of rupee depreciation, and of course, mid caps looking poised much better when it comes to growth. Within BFSI, what do you like? PSU banks have had a stellar run, but there are concerns about around rather private bank margins. Yesterday, We had Axis saying that margins would now bottom out in either Q4 or Q1 of FY27 instead of Q3 that they had earlier signaled. But looking at the broader financial theme, private banks, as I mentioned, margin pressure. PSU banks doing well. NBFCs, some of the larger ones have done well. So, how are you approaching the entire financial basket with the next 1 year time horizon?
See, at Trust Mutual Fund, we generally like financials. Sometimes we like capital markets, but the big lenders are definitely a comfort. Interest rates have come down, and I think the credit quality is likely to remain good. So, like you said, while see the interest margins in India are fairly high compared to global standards. So, I think there is no harm in investing in the large private sector banks, and sticking to quality. I think is important where we know what is the credit standard and what is the kind of growth. So I think PSU banks, there's some amount of valuation comfort. The large NBFCs are, growth oriented stocks. So I think while we might not see spectacular fireworks from the finance sector, I think this is a good place to allocate your assets. And I think if one is moving to sectors which provide relative safety and better visibility, I think the financial sector, banks and NBFCs are a good segment to be with.
Okay, financial sector as a whole is a good segment to be in. But there's one pocket that I would like to touch upon, and that's the recent listings. Why I talk about it is, of course, the stellar run that we have seen in shares of Meesho today. The stock has almost doubled in just a matter of what, 6-7 sessions. Market cap now at 98,000 crore rupees. Do you think is there any more upside left? How many quarters of earnings do you think got discounted today?
I would not really want to comment on individual stocks, but some of the
But is this the
some of
new
the
reality for all these consumer tech names that are listing? And some of them, of course, have not done all that well. They are below their IPO price. But just setting Meesho as an example because of the rally today. Of course, you won't be talking about stocks in particular. But is this the new reality? I mean, what's really happening?
See, I think the floating stock might be not too much for some of the small new listings. And if a investor, if a large mutual fund or insurance company wants to take a sizable bet in the future, let's say even for 3, 4, 5 years, and one wants to build positions, I think the market prices go up. I think some of the new customer-oriented stocks which have been listed, I think offer a good amount of growth opportunities. Cannot say value at these prices, but at least the growth opportunities, given their unique models, which are catering to the large part of Bharat. So going forward, the penetrations are fairly low. So if the growth materializes and if these people can execute properly, then along with the idea of premiumization of consumption, I think these stocks can hold their they can hold their strength. So the floating stock might be a little less than the other prominent stocks, so they could remain supported. But no particular comment about any particular stock.
But most of these names are either just turning profitable or are still reporting losses. In that sense, is it more prudent to wait it out for a couple of more quarters before getting in, or do you think that would be too late?
See, the beauty lies in the eyes of the beholder. And for stock valuation, I guess the valuations depend on the patience of the holder. So if the market liquidity is decent and if mutual funds are getting money from SIPs, and if the FPI selling sort of peters out, then it's quite possible that 2 quarters might be too late. But given the overall stance of global markets which are looking to go nowhere or correct slightly, I think one could wait and watch. For me, the real risk of 2026 is, runaway inflation, because central banks, unlike playing the role of a risk manager, they are sort of playing on the front foot, and they are cutting rates and reducing liquidity deficits to rope in growth, which I think can be very difficult to undo in case inflation goes up. And I think it's a global problem. I think bond yields are
Hmm.
going up, gold is going up, silver is going up, metals are going
Yeah.
up. So I think the risk is that if
Hmm.
inflation goes up, then suddenly you are in a situation where stocks are priced at the upper end of the range, and you are betting on central
Hmm.
banks to do the playing on the front foot. And if they turn into night watchmen, and if they have to start increasing rates, then there could be a problem in terms of valuations.
Hmm. Okay, got your point. But there's a lot more to discuss, but I'm, afraid we are running out of time. But I would like to have another conversation with you, before the end of this year, where we can talk about the outlook for next year and themes to watch out for in particular. But I think we'll have to save it for another day. But for sure in 2025 itself. So I look forward to that chat as well, Sandeep. But for now, I'll have to let you go. Thanks a lot for taking out time and joining in this afternoon.
Thank you. Look forward to the next talk.
Thanks a lot. Well, on that note, just about 7 odd minutes to go for the markets to shut. Let's see what is really happening on the index level. We're just about where we were when I last did the check. Just about down 40 points on the Nifty. So we are off the day's lows, but still, we had reclaimed that 25,900 mark in early trade, but looks like we are ending the day below that level once again. Mid-cap index cuts are deeper here. In fact, the mid-cap index itself is down in excess of 0.5%. The breadth of the market, 2:5, remains poor. And that's been the case, and we'll have to see how things really pan out for the rest of the week. But if you look at the week-to-date performance, Friday to Wednesday rather, the Nifty is down almost, I think, 0.8% or thereabouts. So yes, not turning out to be a great week. Remember, it's the week before the Christmas week, so one would hope for a Santa rally to kick in sooner or later. That's just a hope. Let's see how things really pan out from here, because tomorrow it's the Sensex expiry. So there will be a fair bit of volatility there as well. But the India VIX index has kind of eased further. So that signal is pretty much on the positive side. But let's see how things really pan out on the Sensex expiry day to really see how things unfold. Let's see if we have our chartist or next guest ready. Ashish Bahety will be joining us, research analyst, technical and derivative research analyst at ProfitMart Securities. Yes, he's ready. Ashish, lovely chatting with you this afternoon. We've done well to recover from the day's low. Looks like we are poised to end above that 25,800 mark. But this week itself hasn't been all that great. We've been struggling yesterday. I don't know if the sell-off was really attributable to the fact that it was Nifty expiry. Tomorrow it's Sensex expiry. How do you think the market will pan out tomorrow? Do you expect a fair bit of volatility, and do you expect another down day?
Good afternoon. It's been I'll say from last 3 days, there's a pressure in the market, and every last 3 days, market is continuously making lower lows and lower high pattern. And there's no respite. Even today, we saw some recovery, but if you see the overall breadth, it's still weak. Even the bank Nifty. Yes, the PSU banks are showing strength, but most of the private sector banks, you'll see most of them are down by 1.5%. So there's a bit of pressure so far. Market is a little volatile, and we think it will want to remain volatile for next couple of trading sessions. So till I think, in fact, this whole series we're expecting the volatility will want to be there. VIX is already below 10, so we may see some spike in the VIX in coming weeks.
Okay. We may see some spike in VIX. Today, of course, the VIX was cooling off. Even yesterday, that was the case. But now you're saying that the VIX could also edge up from here. But what about the Nifty Bank Index? What is the kind of support that you'll be watching out for? It has broken below that 59,000 mark. And you already mentioned that the likes of ICICI Bank and HDFC Bank are down with with cuts of somewhere around 1% or so. So what are the next crucial support levels to watch out for the Nifty Bank Index?
The Nifty Bank was relatively, was showing strength, but yesterday with the way Axis Bank dampened the entire momentum, or I'll say the entire sentiment is a little concerned right now. We've seen some bit of recovery in Axis Bank in today's trade, but overall, most of the private banks remains weak. So it's a sell on rise still in Bank Nifty until Bank Nifty doesn't cross this 20-day exponential moving average. We are not bullish on Nifty Bank. Every rise can be used as a selling opportunity. Our target for Nifty Bank on the downside is 58,400.
Okay, 58,400. That's the target for the Nifty Bank Index on the downside. And sell on rise, that's the strategy there. But, just about 3-4 minutes to go for the markets to shut. Any BTST strategies that you would like to share?
So yes, from Bank Nifty itself, SBI is looking good, and I think overall most of the PSU banks are still showing strength. There's been a bit of correction, and again now they've rebounded and moved above their 20-day exponential moving average. The entire index is showing strength, so there's a sector tailwind along with the strength of the individual stocks. So SBI one can go long by keeping a small stop loss of 965. We are hoping that SBI may touch 990 soon.
Okay, that's the pick from Ashish. Ashish, another stock that was in focus today was Sammaan Capital. The case was in the Supreme Court, and the Delhi police has registered a fresh FIR by the Economic Offences Wing in probe with respect to Sammaan Capital's erstwhile promoters. The day, of course, the Supreme Court observations had come out, we saw a very sharp cut in the shares of Sammaan Capital. In fact, if you look at the last 1 month, the stock has shaved off 21%. Now, the Supreme Court has directed CBI to take final call on registering FIR in this case within 1 week. And it has also directed CBI to collect documents from MCA, SEBI, ED. So FIR registration can be considered. Earlier, of course, the court had criticized, investigative agencies like CBI and, of course, even SEBI for that matter, and other agencies for a very lenient and friendly approach in their investigations. Of course, Sammaan Capital had maintained that we have nothing to do because those were the erstwhile, promoters. But now, of course, Supreme Court will take up the case in the second week of January. Today, we saw a knee-jerk reaction coming in, but it did well to recover from those lows. It's down somewhere around 1% or thereabouts. But how would you approach Sammaan Capital? Since the time those regulatory issues cropped up again, the stock had done pretty well. But since then, we saw the stock shaving off 20%. So how do you look at the stock now?
So yes, Indiabulls Housing Finance Ghost is still haunting Sammaan Capital, and there's a series of problems still lingering around the stock. Stock is already part of F&O, and we've seen massive selling, and stock has been in December series itself at least 7 to 8 trading sessions in the ban zone. So it's a avoid category stock right now for us. I think it's a little wait and watch. There are much better stories available in the market right now. Better to chase them, right, rather than sticking to Sammaan Capital.
Okay. It's an avoid right now. Of course, look at better stories when it comes to investment and trading ideas. But hold that thought, Ashish. Will come back to you. Just taking stock of how the markets have shut shop for the day. The Nifty down 38, finally 25,822. Sensex down 120. So 84,550, we've held on to that on the Sensex. The Midcap index, of course, the cuts were deeper. Underperformance continues. 0.5% cut on the Nifty Midcap index. Breadth extremely poor, 1:2. 948 advances to 1998 declines. Bank Nifty 100-point cut. 58,926 is where it's shut shop. So yes, we couldn't really hold on to that 59,000 level. But in terms of sectoral movers, PSU banks, of course, in contrast, were doing extremely well. 1.5% gains coming in on the Nifty PSU bank index. IT was a close second. Metals, turned volatile but managed to end the day in the green. Pharma is another one that managed to eke out slim gains. But what didn't do well, real estate, FMCG, autos. All three on the back foot. In terms of the individual movers, Shriram Finance, of course, that stock top Nifty gainer ahead of the board meet on Friday. SBI is the other one that's, of course, lending support to the PSU bank index. Hindalco, Coal India from the metal pack, some of these technology names like Infosys, Wipro, they are among the gainers. Tata Consumer continues to do well from the consumption lot. Bharti Airtel is the other one that has been doing well. and today as well, it's ended with gains of somewhere around 0.3%. Some, auto names, although the index is down, but you've seen stocks like Eicher Motors, Maruti, Tata Motors, passenger vehicles, all of them have ended the day in the green, and so has Reliance Industries. Mild gains, but nevertheless ending with gains. And Interglobe Aviation, I think it's the fifth straight day of gains for this stock. So yes, those are the gainers. But in terms of laggards, Apollo Hospital, Max Healthcare, Trent, that saw some buying emerge in the earlier part of the week, but once again back in the selling zone. SBI Life, HDFC Life among laggards, and of course, as we were talking about it, HDFC Bank and ICICI Bank are the big banking heavyweights that are under pressure, or that were under pressure today. Let's talk about some of the other names, especially the likes of Indian Overseas Bank. Of course, Centre is divesting some around 3% stake via the offer for sale route. Of course, the stock was under pressure today, but how is this particular counter looking like when you look at the entire, if you look at the entire PSU bank space? How is IOB poised vis-a-vis other names?
It's an outlier from the entire pack, and where we are seeing most of these PSU banks are trading, showing strength on the charts. This stock has been continuously trading below its 200 daily exponential moving average. And in the last, I'll say 7 to 8 months, there have been 5 to 8 attempts to surpass this 200 daily moving average, and every time it got failed. So, today we have seen a massive selling on the news flow, on the basis of news flow of diversification, disinvestment by the government. So, I think it's just a avoid category stock for the time being. From the PSU banks, Can Bank, SBI, and Bank of Baroda, they're showing massive strength. So one should stay, near the momentum. Yes.
Okay, got your point. But what about the other newsmaker, AkzoNobel? Tumbled after the block deal. I think at one point in time it was down somewhere around 14-15%. After the block deal, of course, it has plunged quite a bit, and the stock was anyway under pressure. Any thoughts? Any major breakdown on the charts?
I think it's near its a strong support area, and we will be a little cautious on the stock for at least a day or so. Let the price settle down on the downside. The 3,100 being a strong support area. We're expecting a bounce back from this zone, but still wait and watch for at least a day or so. So price to discover the bottom first, and then we'll take a call on this.
Okay, well, wait for prices to really settle down before taking a call on an AkzoNobel. But talk about the other pocket that was in focus, that's the gas sector. Now, PNGRB has notified the new unified natural gas tariff structure, which will be effective from January 2026. Aside of that, there was a buy call from Nomura on IGL. It has upgraded the stock to buy from neutral target prices at 230 rupees per share. The stock was in a corrective phase, so to say, but today it saw a good 5% up move. Does it signal any kind of a turnaround? Do you think the risk reward is looking good after the recent correction? How are you approaching these stocks like IGL, MGL, Gujarat Gas?
Overall, it's a positive for the stock in a sector as a whole, and we've seen specifically most of these gas distribution companies were in humongous pressure. But I think because of this news flow, there will be a re-rating on these sectors in the stock as a whole. IGL, if I'll say particularly, stock made an attempt to surpass its 20-day exponential moving average. However, the close was exactly a 20-day, which is a positive sign for the stock. Any dip can be used as a buying opportunity here. We've seen some sort of short covering even in the F&O space in GAIL and Petronet. In today's trading session. So the space looks attractive after the massive sell-off we've already seen in this sector as a whole. A top pick would be from this sector would be a Petronet LNG and IGL.
Okay, Petronet LNG and IGL, top picks from the oil and gas space. What about Vedanta? Yesterday, of course, it got the NCLT nod for the demerger plan. We saw the stock stage a very good comeback from the day's low. I think it recovered 5%, hit a fresh 52-week high. Today, there was an upgrade as well from Kotak Institutional. The stock again hit a fresh 52-week high. The entire metal basket has been doing well, and Vedanta has gained some around 30% or so in the last 3 months. What is it looking like? Do you think there is more room to move upside, and how is the risk reward here?
See, entire metal pack is looking very strong, and specifically the non-ferrous metals. I'll say in today's trading session, there's been some bit of profit taking, but I think dip can be used as a buying opportunity. We have already seen a massive run in this stock, and just in the month of I'll say June, and we've already seen stock closed almost 560, 570 zone, touched 560, 570 zone today. So dip can be used as a buying opportunity here.
Hmm. Okay, it can be used as a buying opportunity. I know that you don't really have much data when it comes to recent listings, but one cannot ignore the kind of move that we saw on shares of Meesho. 20% up, crossed the 200 level. There's a UBS buy initiation on this stock. They have a target of 220 or so, and the stock already hit 216 or so. In the matter of 7-8 sessions, it has doubled in value. I mean, you must have looked at the chart. Now, what does it look like? Do you think it merits a look, or I mean, how are you looking at the charts of a Meesho?
Almost close to a 1 lakh crore market cap. In just 5 to 6 trading sessions, stock doubled. And we have seen such exuberance or such phenomena in Ola and Grow kind of stocks, and we know the rest is history, how they have tanked from those highs. So it's an absolute avoid category stock, and no matter what, the investor should not chase such momentum. There are amazing stories available at at those price point, at least I'll say 1 lakh crore. We have seen some of the PSU names which are available at single digit P valuations, which have a high dividend yield of 8 to 10%, even 7-8% at these price levels. So investor can easily and chase or stay invested in those kind of stocks. Meesho or these new age tech stocks, where there's been absolutely crazy momentum, is certainly a void category.
Hmm. Okay, avoid category, and of course, one must exercise caution and not chase this kind of momentum. But let's also talk about some of the other stocks. We had Polycab India that snapped its 4-day gaining streak. In fact, the volume decline that we saw on this counter was the highest in 2 months. The stock even broke below its 100-day moving average. Of course, if you look at the stock movement, it could be actually the first negative year for the stock since it listed. Any thoughts on how the trajectory is looking like on the charts for a Polycab?
See, stock has been seen a good run up, and every dip we've seen this. There's a buying interest in the stock. Stock is available again near its December lows, 8th or 10, around 8th and 10th, 9th of December. We've seen stock tank to this level, and then there was again a bounce back. So there's certainly a buying interest always on the lower level in this stock. 7,000 being a crucial level. We are hopeful that again we may see some support being formed near 7,000. So a dip can be used as a buying opportunity here. We are hopeful the stock may rebound and head back to 7,300 to 7,400 zone.
Okay, that's about Polycab, buy on dip, that's the structure there. But, last couple of stocks then, talk about EPAC Durables. It extended the move that it saw yesterday on the back of strong volumes. Of course, it has also moved above its 50-day moving average, and if you look at the stock performance, it's up 30% from its 52-week lows of 245 or so. How are you looking at this reversal? Is it here to stay, or do you think it was just like a one-time momentum that the stock is seeing? Basically, a weekly momentum that the stock is seeing, temporary.
Yes, yes. Yesterday there was a good swing in the stock. I mean, stock was up in yesterday trading session was almost 15%. Today also we've seen a decent uptick on the stock. There's the clean price and volume breakout. So it looks like some institution is or some bigger investors are buying on the stock right now. There's a clear sign of a reversal on EPAC. A dip can be used as a buying opportunity here, but yes, the stock was under the pressure for whole of almost, I'll say, 2025. So, a buy on dip is advised, but however, investors should stay cautious. Keep a strict stop loss near 285 zone.
Okay, keep a strict stop loss and buy on dips is advisable. And also thoughts on Shriram Finance. It's the top Nifty gainer today. There's a board meet later on in the week to mull fundraise. The stock has been doing well. What's your preference? Would you prefer a Shriram Finance or would you look at names like Bajaj Finance? They've done well. Bajaj Finance, I think, in recent times has seen a bit of a consolidation. So, which one do you prefer?
See, both are an absolute buy category stocks, and I would suggest if you have to buy, put half your money in Shriram and half the money in Bajaj Finance. Both has been an absolute amazing wealth creator, and every dip is we have seen they rebound and move and may continue to make higher highs or a new fresh all-time high. So yes, for the Shriram Finance, the charts is looking really good. We are hopeful that stock we may see 4-digit number very soon on the stock. So we are expecting an upside of almost 140 points from even these levels from mid to long term category. We've already initiated a buyer's recommendation on the stock for our clients, and we're just asking them to just trail the stop loss and keep it near 840 zone. On the Bajaj Finance, I think this dip or this consolidation can be used as a buying opportunity. We've seen a bit of correction in Bajaj Finance from the recent high it made of 1100, and stock is already corrected by 9.5-10%. So this dip can be used as a buying opportunity. We are hopeful that stock may make a new all-time high very soon.
Okay, Shriram Finance, of course, there, and also outlook on the Bajaj Finance stock price. But another newsmaker was Saregama today. The stock was down 6% or so, and the stock has anyway been under selling pressure, very close to 52-week lows as well. Do you expect the stock to breach that level on the lower side as well pretty soon? Because there's been no sign of any kind of recovery when it comes to Saregama.
Yeah. So yes, I mean this zone of 330 to 350, it's the same level where stock took a halt even fall during 2023 and 24. So we are hopeful that there might be some buying interest in this zone. Stock has been under huge pressure from the highs it made in somewhere around 2024 from 682. Stock is almost half from those levels. So even if you see the Fibonacci series, 50% dip is like considered as a support area. So it's any investors holding should maintain a stop loss of 330. If a stock moves above 360, a buying can be initiated here. So a little breakout on the breakout, buying can be initiated here.
Okay, that's the view on Saregama, and those are the levels to watch out for there. But with that, Ashish, we've come to the end of this segment. We'd like to thank you for taking our time and joining in. Look forward to our next interaction as well, probably this year itself. Have a great evening today, and I hope to catch you pretty soon once again.
Sure.
Thanks a lot. Well, on that note, let's shift focus to some of the stocks that are on my radar this afternoon. Of course, IGL, that was one big mover today, and as Ashish also pointed out that it is expected to do well from here, and a buy on dip strategy could be applied there. Risk reward also looking favorable. But in terms of news flow, the PNGRB has notified the new unified natural gas tariff structure, which will be effective from the first month, that is January of 2026. Now, the new policy will reduce tariff zones from 3 to 2, one of which will be up to 300 kilometers and the other will be beyond 300 kilometers. The consumers of both CNG and domestic PNG will pay Zone 1 tariffs across India, irrespective of the distance, as per the new norms. Now, as a result of these new norms, CNG prices will fall anywhere between 1.25 to 2.5 rupees per kg, while domestic PNG prices will improve by 0.9 to 1.8 rupees per standard cubic meter. Now, the new transportation tariffs will be 54 rupees per MMBTU for up to 300 kilometers and 102.86 paise per MMBTU for distance beyond 300 kilometers. CNG and domestic PNG consumers will be charged a standard rate of 54 rupees per MMBTU pan-India. Now, Nomura has upgraded shares of Indraprastha Gas, or IGL for that matter, to buy from neutral on attractive valuation and also raised its price target to 230 rupees from 215 rupees earlier. Now, the brokerage says IGL's margins will be supported by lower taxes and transmission tariffs. It sees this positive margin impact to flow through from the first quarter of FY27. So that's about IGL, of course, an upgrade coming in, and the new reforms also boding well for margins going forward, which is why we saw the stock gaining in excess of 3 to 4% in today's session. The other stock that was the showstopper stock for today was Meesho. A 20% stellar move on the shares of Meesho, and it of course hit the upper circuit as well. The trigger, UBS has initiated coverage on the stock with a buy call. Target price of 220 rupees that implied a potential upside of 22% from yesterday's close price. But mind you, the stock anyway gained 20% today, so it's just about 2% away from that target. So it was somewhere around 216 or so, that stock of Meesho, and just about a few points, a few rupees away from that 220 rupee target. Now, UBS says Meesho operates in an asset-light, negative working capital business model, and that ensures positive cash flows for the company. It has noted that the firm's net merchandise value is estimated to grow at a CAGR of 30% over FY25 to FY30. The brokerage sees contribution margin and adjusted EBITDA margin reaching 6.8% and 3.2% of the net merchandise value by FY30. It added that Meesho's growth is driven by active transacting users, which of course will be rising from 19.9 crores to 51.8 crores. The UBS further sees order frequency increasing from 9.2 times to almost 15 times. However, average order value may decline from 274 rupees to 233 rupees as logistics efficiencies are passed on. Mind you, the company's market cap now stands at almost 98,000 crore rupees. At the time of listing, it had a market cap of 73,000 crore rupees. So, that's the kind of ground it has covered in just 5-6 trading sessions. Shares have now surged around 95% from its IPO price, in just, as I mentioned, 5 or 6 odd trading sessions. So that's the kind of phenomenal run that we saw on the shares of Meesho. Although markets were weak, we saw the shares of Meesho galloping away in trade. But aside of that, post markets, we had the SEBI board meet to watch out for, and all these AMC stocks like HDFC AMC, Aditya Birla AMC, UTI AMC, Canada Robeco, etc. They will be in focus. CNBC TV18 was reporting exclusively that the SEBI board meet today will be deliberating on mutual fund expense ratio as well. And of course, SEBI board, according to sources, is likely to back those rules in the consultation paper. There may be some minor tweaks to proposals based on the stakeholder feedback. But of course, the CNBC TV18 team was waiting for any kind of response from SEBI. But yeah, that will be crucial, the very crucial meet to watch out for in the evening today. Of course, a lot of other issues also on the agenda, but expense ratio when it comes to mutual funds, that will be one of the crucial things to watch out for. I think it's TCS Investor Day as well today, so those cues will also be coming in for trade tomorrow. We'll take stock of that tomorrow morning. But I think with that, we are completely timed out on this edition of Closing Bell. Thanks for watching. Wasn't such a great day for the market, but nevertheless, we managed to defend that 25,800 mark on a closing basis. Let's see what happens tomorrow, because it's a Sensex expiry. Expect a fair bit of volatility, and as Ashish also pointed out, we could see the India VIX index also ticking up. Although in the last 2 sessions we saw India VIX was cooling off. It's at sub 10 levels, but there is a fair bit of risk that even India VIX may tick up given the kind of volatility we have seen in the market. But with that, thanks a lot for tuning in. Stay tuned to Moneycontrol for all your other news and updates, and have a great evening. We'll see you in the markets tomorrow at 9 a.m. Thank you.